If you want to earn passive income trading options, in this new video, we teach you a reliable strategy that can produce passive income week in and week out. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from a professional trader on our desk so you can grow your trading account.
Hi, I'm Seth Freudberg, and I'm the head trader of SMB Capital's options trading desk here in Manhattan. And we're in contact with options traders from all over the world, many of whom are basically seeking additional cash income each week from the markets, but don't have the time to sit and stare at screens all day looking for day trading opportunities, which may or may not materialize, and in fact, may lose money. And so it comes as a surprise to many people that there is a way to create cash income every single week, pretty much regardless of the market we're in. And that's what we're going to be teaching you in today's video. Now, if you're absolutely brand new to options trading and you don't know much about options and how they work, we've created a video for you to understand options basics. And if you click the video appearing on your screen right now, it will lay the groundwork for you to understand this easy option strategy that you can trade each week. Then when you're finished, you can come back and watch the rest of this video. First of all, let's discuss a major premise of today's video, and that is that historically, the S&P 500, represented by the ETF known as SPY, has always ultimately increased in value over time, as you can see from this chart of SPY over the last 30 years, which makes sense, right? Because the world economy and population over time has grown tremendously, and so the large cap stocks represented by the SPY have grown right along with it, and neither of those long-term trends show any signs of abating. It has always ultimately paid to be long SPY stock. And so with that as backdrop, how can we use that basic historical fact to produce income in a shorter time frame? In other words, how can we produce cash from the fact that the SPY ultimately always rises? So let's run through an example of how this cash generation technique works, starting at that point in time. So let's say at the close on Friday, December 30th, 2022, which is the last trading day of 2022, a trader had pulled up an options chain expiring that very next week, Friday, January 6th, 2023. And we looked for an option priced at $2 or more that was as far as possible below the market price of $382.38. And as you can see, that is the 377 strike, which was selling for $2.09, more than 5 points below the closing price of SPY. And so from a cash flow standpoint, we sold that put for $2.09. But remember, the puts that you sell are an obligation to buy 100 of those SPY shares at $377 per share. So you multiply that by 100. And so you receive $209 in cash directly into your account as soon as you have sold those puts. And incidentally, you'll need to have $37,700 in your account to institute this trade, because you may be obligated to buy those shares if SPY closes below $377 on the day the options expire. Let's move forward to the day that that put option expired, which was January 6th. And as you can see, SPY closes at $388.08 that day, but our put option was located down at $377, and so that put option expires worthless because no one is going to exercise the right to sell their SPY shares at $377 when they could be sold in the open market for $388.08. So that option has no value, and we get to just pocket that $209 that we collected the previous week when we entered the trade. And so because we're going to be doing a campaign of these trades, we'll start keeping a scorecard. And so the first entry will be that $209 win because the put option expired worthless, which is exactly what we wanted to happen, because then that's an easy $209 addition to our account for that week. Okay, so we've now freed up our capital so we can move on to the next week. And the put option, which yields at least $200 this week, is the 381, which expires on January 13th, and it's selling for $2.19. And so just like the previous week, that results in a cash inflow of $219 into our accounts. And just like in the previous week, we're going to move to the day this put option expires. And as you can see, the stock closed at $398.50. And so just exactly like the previous week, we go ahead and allow the put option to expire, and we just collect another $219 in our account. Okay, so we continue our campaign, moving to the January 20th options chain. And as you can see for this weekly trade, the 397 put is the lowest put on the chain that yields at least $200. In this case, 227. And so we go ahead and sell that put. But this time, when we move to the next week, we'll see that something interesting happened. And that is that in this case, the stock actually closed below the put strike price. And so when that happens, we are required to buy the shares at the put strike price, which is $397 per share, meaning the $39.7 that we needed in our account to make that trade in the first place is used to buy those shares to keep the campaign going. But as you'll see shortly, that is often going to be a very short-term situation. And don't forget, even though we purchased those 100 shares of SPY, we still get to keep that $227 in cash from selling the January 20th put. So that options cash flow gets added to our scorecard. Okay, so when we get assigned the shares during the process, which is going to happen anytime the stock dips below the put strike price on expiration day, then at that point, the objective of the exercise is to actually sell those shares at the exact same price that we bought them, which in this case is $397 per share. And so the way that we're going to accomplish that is by going into the next week's options chain, the January 27th options chain, and we're going to go ahead and sell a call option at the 39.70 strike on the call side of the options chain, where we find that the price is $295. Now, why do we do this? Well, think about it. Just as a put option causes you to be assigned 100 shares of stock at the strike price of the put, selling a call option requires you to sell your shares of stock at that $397 strike price, which is placed, of course, on purpose exactly at the strike price that the put option required us to buy the shares. That way, if the SPY rallies and exceeds $397, then those shares will automatically be sold at $397, meaning that we bought them for $397 and eventually we sell them for $397. And so our ownership of the SPY shares will yield neither a gain nor a loss, but rather just a break even on the shares themselves. And you'll see shortly why that's a good thing. You see, if we move to 1 week later, you can see that the SPY bounced, closing at 405.68, resulting in the stock being sold at $397 to the call buyer as we fulfill the terms of our call options contract that we sold a week earlier. And so exactly like we mentioned, in the week of January 20th, we were assigned the shares for $397, and a week later we sold the shares at $397, resulting, as we discussed earlier, in no realized gain or realized loss. Rather, we simply update our scorecard. But this time the call income of $295 is added, and so the call income was our income for that week, just as the put income was our income for the previous weeks, resulting in, of course, another $295 of cash into our account for that week. Okay, and so now we're kind of back where we started, right? Because we no longer own the shares, and so we'll return to making weekly income by selling the puts. And so we move forward to the February 3rd options chain. And as you can see, that means we'll be selling the $399 put for $204. And as happened in most of the other cases, the SPY rallied, this time closing at $412.35 on February 3rd. And so the option expires worthless, and we add yet another $204 to our cash flow on the option side. And so rather than go through the details of each trade for the first quarter of 2023, we just went ahead and updated this scorecard for you through the end of March. And as you can see, the remainder of the quarter was a mix of selling puts, and then when we got assigned the shares, selling calls against those shares, sometimes for large amounts of cash like the February 17th trade, and other times, especially in March, for much lesser amounts of premium, but always, in every case, there was some amount of income generated by the strategy. So to summarize, in the first quarter of 2023, we brought in a total of $2,280, which comes to an average of about $175 per trade over the 13 trades in that quarter, on an average capital amount of $40,200, which, if you do the math, results in a return on an annualized basis of 22.68%. And there's one more thing that I think is very important these days, and that is that during the portion of the program that you're selling puts, remember, you need to keep that capital in your account to make the trade, but you're not actually spending that cash to buy the shares. And so those funds can, and I believe should be, invested in money market funds, which in this interest rate environment is meaningful, as you can earn 5% or more in many places at today's rates, which can have a significant additional impact on your returns. And most brokers will allow you to buy those money market funds with those funds that you're using for this program. And so what I'd like you to take away from today's video is that there are easy ways to generate cash flow in the markets through option selling strategies like the one we taught you in today's video, which incidentally is called the wheel strategy by options traders. And if you need to make more cash, you simply multiply the number of puts and calls that you sell, which of course is going to require more capital. But if that is available to you, this cash generating system may be a very attractive alternative to other forms of income generation. Professional options traders use these kinds of strategies all the time in their trading practices, and now you've got the knowledge to do the same.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.